tread water for years, and then you want to do something like get a big loan for a big project and you need to go get lending, or you want to sell the business. Well, you've been putzing around now for years.
Here's a massive corporation with billions of dollars that there's leakage going out.
You can't lose 30 pounds overnight, and you can't fix your books overnight. It's something that you got to keep on top of.
Oh, I have great books. I'm not leaking money. Bullshit. Everybody's leaking money. I'm leaking money. You're leaking money. What are the top things that you would tell somebody that they need to do right now to get their books in alignment?
So a couple things, right? So right off the bat,
each financial decision is not in a silo by itself. It has to be looked at and how it relates to something else in your plan. And most people are not looking at the big picture.
Hey, it's John Smallwood, and we are back on Money Isn't. And I have a very special guest with me, my good friend, Sean Walsh. Sean, welcome.
thank you very much for having me on, John.
Yeah, this is going to be an exciting thing. So here's what I want to do. Sean has a background in banking that is, 35 years of doing it?
Yeah.
Right?
Well, 28.
28. I'm going to round up. Let's just call it 30. Okay. And you work with a lot of small businesses. And one of the things that we're going to be diving in today, I've been focusing on financial, like I have a term called financial pressure, right? And financial pressure is basically, money leaking out of the system. You have a term in financial leakage, okay? And you are helping small businesses get control of their finances. And we're going to talk about, I don't know how many things that we're going to bring up today. It might be 10, it might be 20, it might be one that may get stuck on for like 2 hours, right? But the idea is what I find when I walk into a business, from the entity being sometimes the wrong structure, the amount of money that's just not being controlled, money waste, excess, benefits not being maximized, tax deductions not being maximized. And that just causes financial leaks everywhere in the plan. So before I jump in and we dive into this, give us the big background of what you've been doing and this, what you guys are doing now to help small businesses.
I'd love to. So my majority of my background is in cash management within large financial institutions, right? But that gives me the opportunity to interact with all different size customers. So where I was involved in largely operations of moving the money around. So obviously banks do a lot of different things, one of which is move money, make payments, receive payments, and that was the bulk of my career. I then moved into service for those cash customers. And that was really the start of where I got interaction with the customers directly to see how they interact with us as a bank, the tools that they use, how they use our bank statements, how they handle their billing of the fees that we charge for doing the work that they move through the bank system. And in the last almost 5 years, I was specifically in global billing. And I worked for 3 different major banks, all of which in cash management, all of which interacting with our customers and how they do their banking, their fees, their billing, and all things touch points between our customers and the bank itself, whether that's bank statements, the billing invoices, and how they do business.
Interesting.
Because I have that background, I have a number of folks who often reach out to me that need help with different things. And what shocks me always is just how unorganized, especially the small businesses, but I've seen medium-sized businesses and even the major banks that I've worked in, of just how little folks pay attention to their billing, what fees that are getting hit for. Some folks don't even look at their billing. And then, of course, there's those businesses who bill out for their services and products, right? Knowing that that isn't being managed. That's what I call revenue leakage, to the point that you mentioned. And even the big banks and being exposed to getting bills out there and waiting for monies to come in, that to me, it just flabbergasted me about how much leakage is happening there, where people, that's not the sexy thing about a business, right?
Right.
You're going to invoice a customer, and that customer doesn't pay, or that customer is lagging to pay, right? And those are just amazing to me how little attention that often gets is a big part of revenue leakage. And that often comes from not managing, right, the day to day and doing the measurement of the bookkeeping, right? Because again, you have an accounting department, but it's usually part-time if it's a smaller group. So those kind of things that I keep running into. And that's where I've been able to help the businesses of taking a look at, well, let me just see your books and how you're tracking your business, your balance sheet, the liabilities that you're paying for. And I've seen all kinds of different pieces. Your accounts receivable, what's owed to you from your clients, your accounts payable, where are you in paying your vendors and paying for your services and goods in order to run your business. And those are the primary pieces, especially when
Smallwood Wealth Management is the lead sponsor of this podcast. You have an opportunity to have a free, no obligation conversation with one of our qualified advisors. Go to smallwoodwealth.com, schedule a call, or call us at 800-797-1000 and get on our calendars.
Companies come to me because they're looking for lending from the banks. And then the bank, of course, wants to see the basics of the business. Okay, I need to see your balance sheet. I need to see your accounts receivable, what kind of monies you got coming in, what's your profit and loss. And I was just surprised how little these companies put towards those efforts to be able to generate something. Everybody just wants to give a tax return. Here's my tax return. That should be all you need, right?
Right. So here's like my initial question is, if I don't have really good books, do you think the tax return is right?
No.
Right?
And that's why I love your podcast, right? You come through and you point out the different things, the education and what you're missing, right? And those little pieces, there's tax deductions that you're missing out on. There's all kinds of different pieces that because they're not categorizing their expenses right or their liabilities right. As an example, if you have you bought a piece of equipment, you're paying down on it, right? Set that up as a liability, have an asset at the end, and when you're done paying it off, there's an asset to the company. And that liability is being tracked. But what I often see is people just put it as an expense. That monthly payment they're making on a liability, the liability is not set up, and they're just paying that as an expense, and it's one big expense for the company. Instead of showing...
So not categorized in any like unique way, because there could be depreciation that's being missed. There could be all kinds of wonderful stuff.
Right. So largely the tax return would not be accurate. Right. And then, the business looks far worse off when it comes to lending and needing, monies to inject into the business. You're at a severe disadvantage because the bookkeeping isn't where it needs. And
your profitability looks less rather than capitalizing an expense over a period of time because I'm paying down an asset that there'll be an asset on the other side. So, lending is something that businesses need, right? And, what I see often is people need money because they have to pay their vendors prior to them getting paid,
right?
Which creates a tremendous amount of stress,
right?
And so when you enter it, let's just talk about a couple of different circumstances that you've encountered that you could not believe was actually going, and how it prevented people from getting their finances or even being profitable.
So I'm on the board here for a local country club in my area. And when I joined the board, they were doing a handoff between the old accountant and the new accountant and getting onto the system. And what I was shocked at is that we would continue as a country club to extend the products and services of that country club. So there, members are running up a monthly bill. They had their dues, they had food and beverage, all the different things that they take advantage of at the club if it isn't included in the dues. And then those members weren't paying and nobody was managing it, right? So 1 month, April is when golf season kicks in. April goes by and bill's not paid. May goes by, the bill's not paid. You go June, July, and then suddenly it's like, oh, they're 4 months. They're 4 months in the rears, and now you're into the 5th month. And what happens is these guys just walk away from the club, right?
And there's no consequences. No consequences.
There largely isn't, right? So any of these small businesses, to do credit bureau reporting, you have to report on all of your customers, right? And that's a work. You have to submit it in the right format. You have to do disputes. It's a ton of work, right? And you're not going to want to, report on the good customer who just forgets to pay their bill every month and now and again and hitting their credit rating, right? And you won't have any members.
Yeah.
So, and then turn it over collections. Collections can only do so much. So these guys know that sort of getting some collection calls, they can just walk away from the club and really be okay with it, right?
What are some solutions? What was the strategy that you came up with?
Well, the strategy was now paying attention month on month. So you get your bill cycle, right? You see where they are as a net 30. If they're over 30 days, that is an immediate outreach to a member. If they're over 60 days, you can turn them off in the system, right? So you're not going to incur continuing to give these folks products and services if they're not paying.
Yeah.
And now you tightly manage that. So now you don't have the situation. We don't have a single member who's overdue by more than the most they go overdue is by 30 days. Nobody's over 60 days.
Nice.
Right. And now it's a very controlled situation where you're not letting 5-6 months go by and folks walk away from the club because it turns into a hefty bill that they just can't pay versus guess what? You can't golf come Monday unless you pay your bill in full and just be diligent in managing where you are at any given point with your accounts receivable.
And you can't go dine in the dining room tonight because you haven't paid us. And like, here's your guest and get the hell out of here. You're not going to spend $2,000 in the dining room and stiff us.
Right. And believe it or not, that's just one example with the country club where that's a very clear service, but the lack of managing that account receivables and who's overdue and ensuring that you do not continue the products and services. Small businesses do the same thing. I've seen a couple different businesses where they have outstanding for 90 plus days and they're still doing services for that customer, right? And one, they didn't even know that they were overdue by 90 days because there's no weekly review or even a monthly review of what's outstanding, right? At the very least, come a bill cycle, you should start to see who's aged over the 30, 60 day mark. And at least from a business perspective, stop dumping, products and services and time and your expense into, different customers who you need to get funds back to pay for your products and services to continue your business.
Yeah. So you're not getting your revenue, you're paying out those expenses. You look woefully under profitable and you are, and the chances of that person, the longer they go paying you becomes very small. And you see that in contracting firms. You see it in all kinds of firms. You see that people not paying their bills ridiculously.
Well, and to me, that's one of the biggest challenges with any business, big or small, right? So unless you're a point of sale where you're collecting the money at the point of sale, like retail or any of those different points, or you're asking for all the money up front before you do any work or deliver the product or service, which is not very customer centric. Nobody wants to pay up front. And because businesses sometimes don't deliver either, they take all your money and then you don't get the product or service you're looking for. Yeah, so it's a trust issue, right? But the minute that you take any type of delay in getting your money, you run the risk of there being a delay where you have to buy products and services to continue your business, or that the customer doesn't pay at all, right? So that management, that revenue management, and making sure that you're measuring on a regular basis with your business. And the very unsexy part of any business, people love to do the work, the work, and they're starting these businesses. You have a number of different entrepreneurships, right? Because they just love doing the business itself. But if you don't then pay attention to the books and know where you are at any given point, you don't want to be, having your expenses to provide those products and services without getting paid from the client.
It dumbfounds me. It dumbfounds me when I encounter a business owner, and we work with a lot of them, and their books are 6 months behind. And they're making business decisions with past information that's not even relevant. And they're making decisions to do things that I think are potentially detrimental because they're not measuring the right statistics. I mean, you and I met, and I think our meeting is an interesting journey because We both jumped into a program called Suprahuman, right? We both have had tremendous fitness changes as a result of it. But the business model, that was the biggest thing that intrigued me about that business model, right? Was that the way Madsen put it together is, I'm going to give you all this value. You're writing a check for something upfront that you're not sure it's going to work. And and the fear is that you're going to write that check and it's going to suck. And then I looked at it as a business owner and I said, I have wasted so much money in bad marketing and consultants and shit that never worked. This marketing is really good. I wonder how good it's going to be on the inside once I jump in. And I wrote a small check to jump in. And I was like, oh, this is really incredible. And they delivered on all their products and services. And one of the reasons that they could do that is they had the cash flow to invest in their business, in the people, in the technology to make this thing beautiful. And which caused me to come in and go, oh, at the end of my 12 weeks, I ended up for another year. And then my year was up and I ended up for another year and you ended up for another year also, plus, right? So it's like, and it's when you find really good businesses, you're like, oh, that's really interesting. And then you turn around and you see these people that are extremely successful, but there's stuff that they're doing. They're not paying attention to their profitability. If my books aren't up, like I do my books weekly, right? I don't personally, but I have a person that does my books weekly. And there's constant errors in those books, but we're trying to correct them all the time but if I waited 6 months to look at my books, I'm never going to catch all the mistakes. If I'm and people don't so I present myself to a bank, right? And the bank goes, oh, you're not that profitable. I'm not going to lend you money. What are the major causes of that you've seen? One is like that booking of that asset, but like what else is the problem?
That they have again, the accounts receivable is a big one, where if they have not recorded the payment that came in from the client, even though they would have potentially gotten paid, that invoice is showing open and that they're waiting for money.
So the bank looks at it and say, you're not getting paid, but the money came in, but nobody checked it off. And now it's showing an aging of, oh, it's 90 days. Now the chances of you collecting on that debt. Let's say that I know I've seen businesses that they in essence are able to factor their receivables, right? They can get a loan from a bank in advance to get their money because the receivables are really interesting. But if you're not keeping track of it, you're not going to get any of that.
Correct. And it's the first thing people want to see, right? Any kind of lending institution is going to want to understand the health of the business before they write a sizable loan. And the banks and working for the banks over the years, the Fed you get to any kind of sizable asset base for even the smaller banks, the Fed is going to want to understand what risk controls you have to ensure you're doing safe lending. And if they come in and say, okay, well, show me customer XYZ, right? And what criteria you use to lend this big dollar amount at this rate. And you can't show that you've done the due diligence on those customers because you don't have any of the criteria. If it's a gentleman's handshake and not recording the balance sheet, the receivables, the payables, and the profit and loss statement, those are the four basics that any company should have ready at any given point to be able to pull. If the bank doesn't have that on the customer and they lended the money, the Federal Reserve is going to say, yeah, you guys the risk process here is not where it needs to be, and you're going to have to put more collateral. You're going to have to put more collateral on the line, and that's money that you have to collateralize, and you can't touch it, can't do anything with it. It could be a sizable amount of money because the Fed wants to be protected that you're loaning out all this money that you may not get back because you're loaning it to businesses that you can't prove are safe and sound, right?
So that additional collateral basically. That money I put up, now I can't lend. It's locked. It's dead money.
It's really just sitting there in reserve in case there's any problems with you as a smaller bank that the Fed will want to protect because everything's FDIC insured, and they come in and do full Fed exams. Those are real things that the government keeps close tabs on and making sure that these banks are safe and sound, that they're not doing anything that's too much of a risk of loaning out funds and things to businesses that just aren't there. And without the proper credentials and without the proper artifacts to show that your business is where it needs to be, more than just a tax return. Right? Back in the day, a tax return and a gentleman's handshake, and I bring in this much per month, right? And we kind of do it on the back of a napkin. Those days are no longer. It's going to have to be real artifacts of how your business is doing and showing that you're managing it to the point where you're credit worthy.
Because the banks, are perceived, I was on a conference call yesterday with a group of industry guys, and they were talking about, like, if you're using a bank to do something for financing, right, you're playing by their rules. And if it's other people's rules, it's other people's money and other people's rules, you have, your loans can be called. There can be all kinds of things that if you don't, adhere to the covenants of those loans. And most people don't even know what when you say covenants, people are like, what are you talking about? Well, there's a loan document, right, that has requirements that you have to provide balance sheets. You have to provide P&Ls on a regular basis. You might have to have key man insurance. You might have to have all kinds of things. Like, what do you see how do people lose their loans, get called, basically?
You don't see, honestly, when the loans are set up and everything is provided initially to the loan doc, and they're granted and they're approved for the loan, and away you go, and they start making the payments, they're largely left alone unless they stop making the payment.
Okay.
Right. So you don't see too many where they're going to go and look up the loan doc midterm and figure out whether they're still as buttoned up as they were for the original loan and the approval of it. Right. So as long as you're paying it, it's usually in good shape. And if you're not paying it, then there's bigger problems with the business. And then, that's a whole different, that's the extreme the other way. And to your point, if you go to a bank for lending, you got to follow those. If you find private financing, and a lot of the small businesses do that because, again, they don't show the profitability that they need to get the banks to loan to them. So now you got to find alternate funding, right? And then they're a little okay, and that only is what's the word I'm looking for? It gives them, again, the excuse not to go and keep the books as tight as they need to do, because if you're doing private lending, they're not asking for the same level of details of the bank. So they're even more lax in keeping their books up to date and where they need to be, versus lending with a bank that at any given point you should be able to do it. Never mind, it's good business to know if you're making a profit and what you can do, and if you can grow and expand your business, and what you're looking at, what you need to hit your numbers. Right. And it's interesting. I find when you mentioned superhumans and joining that, I put the parallel very close between business and health. Right. So again, you don't have to be super clean with your fitness. You can eat what you want and have your alcoholic beverages, and you're a little pudgy, and but you live day to day and you're okay. Right. But if you want to get to an elite level, whether that's with your business or with your fitness, and what we've learned from superhumans is that's measurement every day. That's measuring your macros. That's measuring your food, how much protein you're taking in. That's getting the workouts. That's getting in 10,000 to 15,000 steps every day. Right. And that's just clean measurement of what you need to do to be able to get the transformation in your body that you want. That parallel with business is exactly the same. Yeah, you can get away with not looking at, your bank statements and looking at the transactions that come in and making sure your accounts receivable is cleaned up and it's not overly aging. Largely you can send an invoice out, you get the money in at some point, the money's flowing in and out of your account, and you're doing okay. Yeah. Right. But if you want to get to that elite level, and be able to do that and make sure your business is running at least, more than mediocre, you have to do that measurement. You have to put that time in and set up the rituals, and set up the procedures, and set up the time to do that, and hire the right people to do it. Right.
Yeah. I think what's interesting when you start to talk about that, if I'm running a mediocre business, right, which means I'm profitable, I'm making money, I'm taking my family on vacations, I got a nice car, whatever, right? Like, I'm good. But are you really good? Like if that business is not, if you're not measuring, the key performance indicators that make your business more profitable, which therefore makes your business more valuable, right? So people run shit books for years and years, and then they go to sell their company and they get far less money on the sale because they ran
And now the jig is
shitty
up,
books.
right? You can tread water for years, and then you want to do something like get a big loan for a big project, and you need to go get lending, or you want to sell the business. Well, you've been putzing around now for years, and it's almost, and you can't go, once you file a tax return, you can't go messing with those financially. You can't start messing with those books because you're going to have to either refile or you're stuck with whatever you did. There's no cleaning things up later once you start filing the tax returns year on year, right?
Yeah. So you can't make a business more profitable and more valuable once you file that tax return. Now there's things that you could, like, hey, there's a car allowance. You might be paying yourself as the business owner a little bit more, a bit less. You might be taking a bigger S distribution or whatever that is. But widely held, that business has to be, quarter by quarter by quarter, has to have excellence attached to it so that it is maximizing the value. And I talk about it. Yesterday I was doing a presentation and we were talking about if I don't run the business books properly, when it hits my tax return, I'm paying more taxes than I should because I didn't maximize all the proper, the depreciation schedules. I didn't maximize qualified business income deduction and, better known as 199A or better known as QBI, right? I live in New Jersey and there's 16 or 21 states that have that BATE deduction that allows the state level tax to be paid to take a benefit of that tax. Now, those are things that if I'm going to sell the business, like if I'm paying my state level taxes from the S Corp to take a deduction, those are things that get added back in from a sale, right? Because it's, you're prepaying taxes that are technically personal taxes, right? But it's sort of like one of my favorite motivational guys for all time is Jim Rohn, right? I don't know if you ever listened to any of his stuff, right? I happened to, it was in Port Jeff over the weekend out in Long Island, and it was not great weather, right? So I went for this 9-mile walk early morning, and I'm like, well, I got to listen to something. And I saw like on the YouTube, like a presentation, and he was talking about, 15 years from now, you're going to arrive somewhere. And like, is it where you want to be? And then he started to correlate, like, is your business, are you taking the right steps in your business? Are you managing it properly today that it's going to give you everything that you want in your future? And most importantly, are you going to get the full value for it? And you start doing all the correlations, right? Like, I'm a business owner and I want to get a loan because I see, hey, I can buy a competitor. I can invest in new equipment. I can invest in a new, product. I can, like, what are the ways that I'm going to grow my business? But if I don't have really clean books, I'm not going to get the full value for what I can do. And therefore I have these opportunity costs. If I don't track my books properly, I'm paying more taxes. I'm not making as much money. Maybe I could make 20% more and actually pay a little bit more tax, but shit, I'll make 20% more all day long and pay more tax. Like, that's a happy conversation. But like, I've seen people go, we want to build we're 5 years in business and we want to do an expansion. And nobody lends them any money. And then they're like, oh, we can't do it. The presentation is wrong. Like, if you were going to, you have a service that you're doing now, right? That you help small businesses get their books in order. How do people reach you if they want to have that conversation?
Well, what I've been partnering with is CPA firms here locally within my area, only because the CPA firms, when somebody comes to them, the exact same thing. When they try to do the taxes and they look at the books, and they're like, oh, you guys have to clean this up, right? So I've been almost a supplement to help where the CPA firms who don't have the time are going to charge an extraordinary amount of money to help clean up the books. And they're really not in the business to do that, right? They're there to do all the accounting pieces and get the tax returns out and and pump it out, they'll supplement that off to me and say, I know a guy that can help you look at this, sit with you, understand how you're looking at it, set procedures, especially QuickBooks Online, which is very popular with most of the small to mid to medium businesses. You can log in remotely from anywhere and to be able to see the books and work with companies. You don't even have to be in the same town. You can do that virtually.
Anyway,
and be able to get them to a spot. I just helped a small business. They had yet to file their 2022 tax return because their CPA said the same thing. Well, you got double the transactions in here. Your bank statement doesn't match your QuickBooks statement, right? Never mind the accounts receivable and what was outstanding, right? So, and then the bank, of course, couldn't give them something that far back from transactional. So they're trying to get the data. I'm like, well, just give me the PDF of your statement. I'll create a manual file. We'll get all the transactions in, delete the duplicates because they'd suck things in twice from some of the different months when they were doing that. And just the basics of getting the balance in the QuickBooks register to match the bank balance. And then from there, you can start looking at the other pieces. So that's, largely how I've been doing that since I ended my time at the bank.
yeah.
Earlier this year, and continue to reach out more. I don't have a website or anything up set up just yet, only because it's been word of mouth, and I've had plenty of business to do that. My email is CEO at addvaluebuildrelationships.com.
Say that again.
Which CEO at addvaluebuildrelationships.com.
I like it.
Right. Because that's what I love doing is jumping into this. A lot of these businesses, they do the bookkeeping part-time, right? It's somebody's
The wife is doing
that,
it when she has time. Yeah.
At the kitchen table and right. Or it's a big enough, like the country club had one individual in the office, and it takes two individuals to do all the things that need to be done admin wise for the country club. So the thing that hit the back burner was always so the in and out flows, the financial pieces, checking on the people who haven't paid their invoices, their monthly membership dues. There's so many other things to do that's the last thing that gets touched, right? So now I can come in and help get it all aligned, get the procedures in place, set up the rules in QuickBooks, so it's largely automated, and you don't have to hire an employee, and it's temporary, right? And then I can always sneak in and take a look at the health of the system, right? Because you can log into QuickBooks and just check to see that how's the accounts receivable doing? Are things aging past 60 days, right? How's the accounts payable looking? And if things start jumping out at you, and be able to, run a balance sheet, a profit and loss, accounts receivable and payable report, and know that those look fundamentally healthy and sound, at least on a monthly basis. Those are the kinds of things that I've been helping different businesses do that can't really afford to hire a full-time bookkeeper or accountant. They have their own CPAs. Everybody does, right? They have their lawyers, all those good things, but it's that one area that always hits the back burner that, like we say, you can't, same thing with it's the synergies between health. You can't lose 30 pounds overnight, and you can't fix your books overnight. It's something that you got to keep on top of, and being to manage that and all the things you need to measure, whether that's good health or good business. Those are the things that you can do, and you don't gain 50 pounds in a month, and you don't get upside down in your books over a month either. But over time, it all adds up, and the more diligent you are for something that really people don't want to do, whether that's managing their diet and their fitness and their exercise, or managing their books. But it's such a key, fundamental, foundational piece that if you do that, you have the value is tremendous to it that you can't even start to measure because you're not measuring anything in the first place. And I see so many of these businesses too, John, where they don't realize that all their income's coming from one customer, right? Or 80% from one customer, and they lose the customer. Look, how does this happen? Well, if you're looking at how your distribution of how your income's coming in and across the different accounts, it's just those little things like that.
They get very
very
comfortable, and they're building up infrastructure and overhead around this one client, and they don't realize they stop selling because they got comfortable. All right. And they become extremely vulnerable and they're like, I'm comfortable. I'm making $500,000 a year. I don't, I don't need more. And that's like Jim Rohn was like $500,000 a year is okay if that's all you're capable of. And I was like, these businesses that become single, in essence, a family office to one business, right? That they become, the solo piece, they're vulnerable. They're vulnerable, glass manufacturers. I had one that was doing glass for, airplanes and, trucks and stuff like that. And they had like 89% of their business came from one vendor, one person, one company, and they changed and it was cataclysmic. Right. And it's sort of like, it's funny. I something you said caused me to think about this a few minutes ago. My daughter did a summer internship in a finance department at a large, one of New Jersey's largest healthcare systems. And she's working in the finance department. And I'm like, well, what are you doing? And she said, this was like on a Monday. And she tells me like, I'm going into the bank site and I'm going into this other site and I'm checking to see if the health insurance company paid the hospital or whatever the system. And if they haven't paid, I'm marking it 0. I'm like, you're doing that manually? It's like, yeah, I'm going and I'm looking at, the bank to see, is there a deposit with the name? And I'm like, there's not like technology that does that? And she's like, no. And I'm doing it. And about 4 or 5 days later, she comes to me, she goes, the woman I'm working for brought me aside and said, I just want you to see that these zeros that you're putting in for us, that triggered somebody on the team to go get the receivable. And this one that you put in, we were able to collect $250,000 receivable. That was 6 months out. And there's the leakage, right? And I'm thinking to myself, here's a massive corporation with billions of dollars that there's leakage going out. So like people go, oh, I have great books. I'm not leaking money. Bullshit. Everybody's leaking money. I'm leaking money. You're leaking money, right? We are. And like, I think one of the things that's really interesting, it's like, I had like one of my clients is, he has an outsourced CFO. And the guy's mantra is like, we're just going in and we're cutting your budgets and we're going to save you money. And in the face of destructing his sales process. So it's like, if you're focusing on cost reduction and you're not focused on growth, you're going to cost cut yourself into oblivion, right? And it's like, to me, the sales team, most businesses do not have a robust sales client acquisition program. They get lucky. And I say lucky, because you're in the right place at the right time. Somebody, but are you really selling your services to that level? And I look at this and say, how do I make a business more profitable? One, you get rid of all the leakage, right? But how do you increase sales? How do you, how many people in your career, like when you looked at the books, did you realize that they haven't changed their pricing in 5 or 10 years?
Right. And the customer's not looking at that either. Nobody's even touching that. And what I've also seen is the sales folks will go and sell a deal and it has an estimated value and they get paid their bonuses on that value.
Oh shit.
But not the actual revenue coming in. Nobody tracks it at the back end to know that they're actually paying for those products and services at the rate that you sold them for, right? And you have this revenue leakage of months and months and months. And then what happens is if it goes on long enough, then they just negotiate, well, you owe us for 6 months from a year and a half ago that you never paid because you didn't have enough, liquidity credits covering it and you didn't pay attention to it. You never paid it. We never called you on it. And so why don't we just work out a deal where you cover a portion of that, right? Because I want to, sell you some more products and services. but I can't do it because you owe me too much money over here, but we'll just half settle for that. Right. And those kind of deals happen all the time within sales, right? Because
Now
the
I paid my
salesman wants to
salesman
get
on
the
the
next
full,
sale.
paid my salesman on full comp, and nobody in the team has the ability to even go, oh, we got to claw back.
I shouldn't say never, but very infrequent do I ever see that the actual revenue get tied to the actual deal that the sales guy made with that particular client to know that there's no gap. Right. And the sales guy doesn't want to go chasing the relationship he has with the customer to say, hey, you're not paying your bill, because there's no skin in the game for the sales guy. Sales guy's already got his bonus. He's happy. Yeah, right. And they're like, well, that's a collections problem. Billing operations, you go do that. I'm like, well, you don't want an operations person calling your customer to say, hey, you owe us money. You have the relationship with the client. We need you to have that relationship conversation. But again, there's no skin off their back, because they've already gotten the bonuses paid on the estimated revenue, not the actual revenue that's coming in.
And what I've seen often is people, the salesmen have pricing control and they want the sale because they're going to get the commission. But actually, when the job comes in, if nobody did cost accounting on the job's actually upside down.
Correct.
Like the business you actually went better off not taking that sales contract. You would have been more profitable. And it's like, why aren't we seeing this, right? So,
because we're not looking end to end. If you're not looking end to end, you're missing out on all of those pieces. If everybody's doing their own little piece and nobody's talking to one another from end to end, which the bigger the company, the more that happens. And at the end of the day, you're not making money. You're doing a lot of ins and outs, but at the end of the day, you're not being profitable, and you're better off saying we're going to end the relationship, right?
Yeah, and it's so from a consulting perspective, when here's the thing that was kind of interesting to me earlier in the conversation was the CPA firm doesn't have time to really clean up the books. So they might actually just shift those books a little bit clean enough to go file a tax return if they're close. But which creates a problem, because I talk about the destruction of wealth, right? And the destruction of wealth is paying more taxes than I'm supposed to in my financial strategies. So what I'm hearing initially out of the gate is, if I do that, I most likely expose myself to more taxes. Unquantifiable. And, me coming in, hey, you're a new client and you're a business owner. Great. We have this fabulous service that we do for business owners. I'm looking at QuickBooks or whatever, NetSuite, whatever they're using, correlated to their tax returns, which is bad data. In most cases, it's mediocre data. All right. It's almost like we need the superhuman of books, supra books. We need supra books. Okay.
Yep. The chop wood, carry water. I mean, that's what it is of managing your books each and every day of where you are at any given point, right? Some folks, which is the exception, do it really well and manage it every day. Even if they got their spreadsheet out and they're not using something proper, you can use whatever you want, just you got to be diligent in what you do. Certain things are, help and have some rules and other automations. But again, you got to learn what's there, whether you're using QuickBooks Online or any other financial package or a spreadsheet, right?
It's incredible also, as you just, again, everything you're saying is like creating all these like explosions in my brain, right? But it's like business owners come in and they literally are trying to, like, if I sell the company for $4 million, I'm making, let's say, $400,000. It's all going to be great. And I look at it and I go, okay, in your P&L, how much of those expenses are personal expenses? The Costco runs, the cell phones, the insurance costs, and they don't really realize how valuable the business was for sheltering so many of those interesting expenses. And now they sell and somebody else is like, okay, here's all your stuff, Sean, go home. And now you got to pay for all this stuff. You're like, they don't even know it. Like you've got to, like, if you're a business owner, you got to know what, what's technically, like you're paying for your car fuel. You're paying for, you're getting mileage expenses. You might be taking a lease deduction. You might be taking accelerated depreciation on a car. I mean, it's, some of these tax laws are really powerful, but it discounts the books and, and it's money that's being spent in the corporation that is actually has a personal element to it, which is fully allowable and fully deductible in the, in the IRS. But it's like, I'm not quantifying that. So when I look at, hey, my personal expenses, like I have, lawyers and stuff like that as clients, and like somebody's writing a check from the profits to pay their personal Amex, and they're just, 1099ing them, adding it to their distribution. And they don't even think of that as their personal expenses. It's kind of like not calculated. And I'm like, guys, if you're going to retire, all those things that are being paid, how are you going to manage that? So you actually need more money. And I'm on this journey that, I've been doing what I do for 35 years. Okay. I started in technically 89 on a summer contract, got licensed in the life insurance side of this business, came full-time in 1990, then got all my other licenses, got my certified financial planning certified financial planning designation by, I believe it was December of 93. And, I've been working with business owners for a very, very long time, but this journey, I realized much of what is going on, and I've known this for a long time, and as you get older and you become more experienced, you see there's so much mediocrity governing financial strategies, governing the way people manage their businesses, governing the way they manage their books. And then you see something like what, Superhuman basically did. And I want to talk about it because there was a shift that he made. There was a shift that we can all benefit from, that when you look at things rather than from the mediocre standpoint, good enough, and you look at it and go, well, what's excellent? Like in a perfect world, do I want to account for every single dollar that's coming out of my business plus my personal plan? 100%. I want to know, like, what makes a company and a personal balance sheet super successful is knowing where the money goes. And how many people have you encountered that like, I just don't know where it goes?
Just glazes over, right?
Yeah. And you're like, how do you manage these projects and how do you manage growth? And I just think there's this whole, I think how many small businesses are there? Like 48% of, I think, the population is employed in some form or fashion for business owners from privately held companies. And they're like, they could employ so many more people and make so much more money and be so much more powerful if they manage their books properly.
Well, and another classic example that I've seen, and even one of the clients I'm working for now, they're doing 4 different businesses and it's all lumped under one LLC and all one set of books. Now, God forbid something happens with one of those businesses, the whole thing goes up in smoke.
Yeah, the liability side, right? Yeah, right.
Those should be separate entities that are all structured. I got to keep 4 sets of books now. I can barely keep up with the one, right? And I said, well, is that the reason why you haven't separated this out? Oh yeah, that seems like way too much work to me. I want to manage the one set of books. I'm like, yeah, but if you get caught with one of these other businesses, it's going to wipe out all of the other 3 with it.
Even we were working with a business where they had 2 different types of revenue streams. One that had no limit on the 199A deduction, and one that would be, the cap at the $400,000 would be capped, right? Because it was service, right? And what we're looking at is they couldn't determine what expense was associated to each book of business. And it became really powerful because we're talking about multiple millions of dollars of profit in the company, of which if you could get 20% QBI deduction on $2 million, it's a $400,000 deduction. But if you can't figure out where the expenses are coming from, they weren't taking it. And they're like, oh, we're not sure if we should, my accountant's like, we're not sure if we should do this. I'm like, you're not sure if you should save, okay, top bracket, let's round up to 40% on 400,000. You're not sure if you should take a deduction and save $160,000 in taxes, plus New Jersey, plus. That doesn't even make any sense.
And it's just amazing that people don't want to be bothered to chop the wood and carry the water.
Yeah, so write a check for 160. Like I know if I had a choice I could put that 160 into the economy and spend it and put that money in motion and hire people and do things with it, or I could give it to the government. Which one's going to have better velocity? Right?
And again, John, right, day on day, maybe people don't have that interest, but then something pops up where now you need it. You want to sell the company, you want to grow the company, you want to buy another company. It's, again, I relate it right back to health, right? Every day you're eating whatever you want to eat and drinking whatever you want to drink, and then all of a sudden you got a heart condition or you got some health ailment, right? And now you've just let things go each and every day and let them slide. And then something pops up that, oh my goodness, I'm going to have to really manage this now because of whatever the condition may be in your life and your health or your business and what's popping up in it, right? Yeah. Of your livelihood as a whole. And that's why, people don't have that diligence that they need to have every day for the excellence, but then they get caught with their pants down on a particular incident that happens, whether it be in business or in their own health. And now you can't fix these things overnight, right? And you're caught, and you hope that you survive it and you do the right things going forward. But ideally, you were never in that situation to begin with, right?
Yeah, I mean, even as basic in that particular conversation that you just had, like, even let's say that I'm a business owner and I'm not running my books properly, and I'm not, I'm not paying in. I could be paying in at the full Social Security number, and I haven't done a good job of saving, and I have an event that I don't do it, but now I get less Social Security. Like, there's so many like little stupid nuances like that where, we're screwing ourselves if we don't do this right. Like, and if I'm a business owner, which I am, if you're a business owner and you're listening to this, you have actually, what Sean is telling us is we have control over how our profitability looks, but we need to understand what are the key performance indicators in the book of what makes your company successful, and how do you maximize every single one of those and account for them properly so you can sell your business for the right amount of money and you can get lending when you need lending. Like, let's say I go use shitty private lending. I'm paying a premium for that shitty private lending because I have crappy books.
Yeah, because the banks won't lend to you. Yep, absolutely.
Like I get direct mail because everybody knows I'm a business owner, and like I get some crazy offers because they know, you're a registered securities person, and they will send a mailer out to us that, lines of credit for $250, boom, 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 boom. Because conventional banks don't lend money to investment advisors. It's very difficult, right? So, but they're predatory rates. They're predatory. And it's like, why would I do that? But people I want to basically close this out from a standpoint of, if you had advice that that's going to filter out to the majority of the people that are going to be listening to this, what are the top things that you would tell somebody that they need to do right now to get their books in alignment?
So a couple of things, right? So right off the bat, you have to dedicate the time or the personnel to be managing that as frequent as possible of your books of what's happening on a day-to-day basis, ideally, at least week to week, and God forbid, month to month, right? Of putting the right level of, it can't be, a spouse's part-time job to do it at the kitchen table, after the kids go to sleep. It has to have a concentrated effort.
Right.
Two is you should have the bare minimums for any business of a balance sheet, a profit and loss statement with accounts receivable and accounts payable. If you do nothing else other than have that always up to date, not just a tax return at the end of the year, and that looks accurate when you pull that up, and that nothing jumps out at you. And if your books aren't where they need to be, things are gonna jump out at you.
Yeah.
As an example, a client makes payments on their credit card, but never ingests in the transaction that they're actually paying for on that credit card. So all you see is these negative amount from a credit card perspective, with none of the transactions being categorized and the expenses and what they are and whether they're personal. So it jumps right out at you of why we're having, in the different, in the chart of accounts, why you're having a big negative number. Well, because you're making payments onto a credit card that has no transactions on it, right? Those things are going to jump right out at you, right? And that's where I come in and look and say, okay, well, have you ever printed a balance sheet? No, I've never printed a balance sheet, right? I even get down to that level of, right, well, what's your accounts receivable? What is it? Oh, everybody's paid me. There's nothing outstanding. But QuickBooks, it's a click of a button.
Yeah.
Like, well, it shows you have $276,000 that's aged over 90 days. So you click on the little link in QuickBooks, and all the customers, oh no, these customers have all paid. Well, then somebody isn't logging the payment, or you're not matching the deposit to the invoice, so it's all showing as open, right? Those are just the little things, and to have those four pieces of information at any given point on your business that don't look silly when you print them, and that you can give them on demand if anybody needs them for whatever the reason, sale of the business or lending or any other aspect of it, not just here's my tax return. That's powerful. And at the very minimum, they should be doing that. And if they're not, then you got to really sit down and look at it and see what it's going to take to get healthy enough to at least be able to generate those four pieces of information at any given point. And that's not just businesses either. I got people who have their own personal bank accounts. They don't track any of this stuff. They don't have budgets. They don't know ins and outs. They're spending like wild. They're hitting their credit cards, and their income their expenses far exceed their income. And then they're all of a sudden, they have credit ratings that are, in the basement, and right. And they don't realize even what they need to make to even get even. It extends typically for business owners. If their business is like that, those are personal finances. And when you start to look at this stuff, because to your point, John, I see so many personal expenses in the business, and I'm like, is this personal or is this part? Oh no, that's personal. I said, well, how are you tracking that at a personal level? Well, we're really not. I say, are you ingesting those in to see what your spending categories are? Is it all food? Is it booze? Is it? Well, I don't know. I don't categorize any of that stuff, right? So it's right down to that level, even as individuals, that I see just on how unhealthy the general public is in those areas.
I mean, people come in and they're like, oh, I just need to, I'm going to retire in a year. And like, we have a family budget and it's like $10,000 a month. And I'm like, okay, you're making $350. I see what you're paying in taxes. I see your mortgage payment. I see your real estate taxes. I see what went into savings. I can see that because it's all there. I see your insurance costs. And that's $20,000 per month. And they're like, no, but we just need 10. I'm like, well, what's going to change in the budget? And they're like, no, we don't spend that much money. I'm like, go home and prove me wrong. And they come back and they're like, oh my God. Yeah. Like, and you're not ready to retire. Like, people retire without really understanding what they're spending. And to me, the definition of a really successful retirement is to be able to live the exact same lifestyle that I have today as why I'm working in retirement, but now I have 40, 50, 60 hours more per week. I actually need more money. Because what am I going to do? I'm going to sit in my backyard, and you have a beautiful backyard that I'm looking at here, right? It's beautiful. But like, do I want to sit in the backyard all day and ponder what I'm going to do in the afternoon? I'm like, no, I want to do stuff. Right? So Sean, this was awesome. I can't thank you enough for being on and sharing this. And as you get more and more, structured with this, we'd like to have you back on to even share more minutia, because your experiences, by the time, Christmas rolls around, you're going to have a lot more content and a lot more good, stuff that you're seeing it. And we'd love to, I'd love you to share more. And even your business partner, if he wants to be on, I'd love to have it, or she, I'd love to have a conversation too. Because the more information like this that we can share and give people to realize that they need to control their outcome. In order to control the outcome, they got to measure what's important and get clear with that, the better off we're all going to be. So thank you.
And I can put some case studies together, and for sure, when people listen, they're like, "Oh, wait, that's me." The case study fits me to a T. Of the different things that, just the examples I brought up here today. But we can add to that, and we can have future discussions. And that would, if it benefits, and why I love your podcast so much, it's giving the education to folks to know that they're not alone in some of the different things that they're not managing correctly, and by tweaking a couple of things, measuring the right things, that you can be so much better off than is even imaginable. Just like you and I have seen with our health and some of the things that Superhumans has brought, of just what that means, and the measurement, and being in the same situations as a general public.
Yeah,
I'd be happy to share those.
It's truly incredible. And one of the things that I want to end on this, as I have a little bit of a comment here, is that, when you find something that is really, really powerful, right? That is life-changing, it's life-altering, it's extraordinary, quality, right? You want to share that with as many people as you want, right? You want to give as much referral or, of whatever you're going to do. And I think when I encounter an experience that has tremendous capabilities, like, with what John's doing with Superhuman, Dan Sullivan with the strategic coach, and I've ever seen any of that, the thinking that these entrepreneurs and these business owners are providing to business owners and people to make better decisions, you want to refer that as much as you possibly can. And that's, with the podcast, my goal in, doing the Money Isn't podcast, like, money isn't, when people go, what the hell is that? Like, what is that? Like, you start thinking about things that are like, I'm not really sure what that means. And, to me, success is success, and money correlates with success. But if I'm not maximizing my dollars, regardless of how much money I have, I'm wasting my opportunities, right? And that's what I want is, I want everybody listening to this, I want you to like it. I want you to share it. I want you to share it with as many people, but I also want you to get as much value from the conversations, which is why we don't hold back on this. Like, to me, I'm going to give as much content as I possibly can. Your job as the listener is to take it, absorb it, and say, does this work for me? Can I apply this? And if you can, we're here, we have 6-7 advisors on team right now. Some of them are certified financial planners. Some of them are not. They're working towards it, and they're learning this business, and they're geared to work with special people in different areas, like business owners versus corporate exec versus retirees versus young and up and coming. The decisions you make right now dictate where you're going to be 15 years from now, right? And it comes from health. Like, if you're going to retire and you have crappy health, that's not a good thing. If you're going to retire and have crappy income, that's not a good thing. All right. So I appreciate this. And I look forward to more conversations with people like you that can really help people make a change. Thank you.
I appreciate it. Thank you for having me on.